Good morning, everyone. My name's Scott Tate. I'm President and CEO of the Greater St. Charles County Chamber of Commerce. I want to welcome you to our Chamber University Business Seminar today. We have Jane Grayson, who will be talking about advanced QuickBooks. But really quickly, we want to thank the Villages of St. Peter's Memory Care for being our sponsor today. They've been great supporters of the Chamber, and if you're interested in learning more about their facility, we certainly encourage you to check them out, give them a call, and they'd be happy to provide you with the tour. So with that said, I'm going to turn the program over to Jane Grayson with Grayson Accounting. Jane has, earlier this month did a program for us, which was more beginning QuickBooks. And so today she's going to provide us with a little more information, a little more detailed information on advanced QuickBooks. So with that said, I'm going to turn it over to Jane. So Jane, it's all yours.
Thanks, Scott. Good morning, everybody, Chamber peeps and guests. Thanks for watching. I have been a QuickBooks Pro advisor with the desktop version of QuickBooks since 2004 and the online version since that was a thing. So if you have a QuickBooks question related to what we talk about today or something else, please just give me a holler. Let's jump right into, you've had your QuickBooks for a while, and so now maybe things are a little messy and you need to figure out what to do. The first thing I like to look at with people is their chart of accounts. So here's our little sample company that QuickBooks provides. If you go down to this tab on the left that says accounting, you have two choices, chart of accounts and reconcile. We're going to pick chart of accounts. And this brings up, chart of accounts just means the list of all the accounts that I have. So I want to sort them by the detail type because I want to see all my bank accounts together. I want to see all my income accounts together for this purpose. So the first thing I like to look at is, do you have accounts that mean the same thing, but they're two different lines? That's really common to do that, especially when you're new. You get all excited at adding accounts and you start to type something and it doesn't pre-fill and you think, oh, I thought that was in there. So you make another one and then you have two in there that really mean the same thing. So some examples of that are, here's job expenses up here, and then we have job materials down here. So is that the same or not? Accounting and bookkeeping, do we really need to have two separate lines for that? Good examples of that are bank fees. You might have a line for credit card fees and a line for bank fees that your bank charges you an analysis fee or just a monthly service charge that's $5 or $6 every month. And then your credit card fees, do you really need to track those two things separately? Probably not. Your accountant or whoever does your tax return has to group all those things together. It takes longer for them to do your tax return, so it's going to cost you more money to have your taxes prepared if you've got accounts all over the place that really mean the same thing. Office supplies and office expense is one that I see a lot too. There's really not any difference with that. And some people try to justify, well, we mean this, we mean consumables for this, doesn't matter. It's just all office expense. It doesn't really need to be that granular in your chart of accounts. An advantage to cleaning up your chart of accounts is, although if you scroll to the bottom, it tells you what the total of lines that you have. If you have more than 250, that automatically bumps you to the advanced subscription in QuickBooks Online. That's like $150 a month as opposed to $70. So if you notice your QuickBooks monthly subscription amount jumped, look and see if your chart of accounts is over 250, because if it is, that might be the reason why your fees jumped. And that can make a big difference. The way you would correct some things that are duplicated, like let's say this accounting and bookkeeping, we really don't need that to be the same or two different lines. So I'm going to pick this one and edit. And I have to, oh, I can't move that. I have to spell this exactly how I spelled the other one. there two Ks? There is. EEP. So if I name this exactly the same as the other one, oh, I did bookkeeping, not bookkeeper. My bad. All right, so edit. Now it's going to say that name's already used. Do you want to merge them? If you say no, it puts it back the way it was. But if I say yes, now I've only got one line that really kind of means the same thing. So all my bookkeeper accounting expenses are going to be in this line. Instead of opening a report and opening every single transaction that you had under accounting and changing it to bookkeeping, which you can also do, but it can take a long time if there's a lot of them. A fast way to change them all at one time and get all those transactions in one line is just to merge the accounts. One thing to note, if you merge accounts, you cannot undo that. There are so many things in QuickBooks that you can just open the transaction and fix it. Once you merge it, you cannot undo a merge. Another thing to look for is these types of accounts. Make sure your accounts have the correct type. If you add a new account, the first one on the list, because it's alphabetical, is bank. So sometimes I see expense accounts that are on the balance sheet because the type is bank. Make sure that you change the account to the correct account when you're adding a new account. But look at this one, cost of goods sold. So we're in a company that's, I can't see that from here. It's a landscaping company. So I have some things that are directly related to my landscaping. My trader business is my income, but cost of goods sold should be things that are directly related to my trader business income. So this is good, but there's also some things down here in expenses, like these job expenses and job materials. Really, these things could be better represented in cost of goods sold. You'll get better reports if you're doing any metrics like what's my gross margin and my profit percentage. You'll need to have direct costs in cost of goods sold and not in expense. That's an easy thing to change. From the chart of accounts, you can edit and then just change it to whatever is the correct type of account. These are sub-accounts, if you'll notice. So sometimes people go a little crazy with sub-accounts and they have entirely too much detail in their sub-accounts. Sometimes you need it. If I'm a landscaper, I kind of need to know what my costs are in these specific areas. But if I have utilities, do I really need to break out? I've seen gas and electric and trash and telephone and internet and satellite and and it really doesn't matter. Those are all utilities. So sometimes you can overuse the sub-account function and have too much detail. So look at that too and maybe merge some of your sub-accounts into less lines. But sometimes it's necessary. So if I want to keep track of this is maintenance and repair and it really matters to me how much I'm spending on equipment repairs, that might help me decide when I need to replace a piece of equipment if I've got a lot in this line. But if I'm going to change or merge or do any changes to any of these accounts that are connected, I have to do all of them. So you can't have, this is the main account, it doesn't have this box checked. The sub-accounts have that box checked. So you can't have, if I was going to change this to cost of goods sold, it's a sub-account of an expense so that those types, this account type has to match. So sometimes you have to undo sub-accounts to change them and then you can re-sub-account them. Another very common too much information is under payroll taxes. If you have separate accounts, and this one doesn't have it, if you have separate expense accounts for Social Security and Medicare and state unemployment and federal unemployment, it's not like you can change those percentages. They are what they are. It's neater and cleaner not to have too much detail in that account, because nobody's going to sit around in a meeting and talk about, well, what can we do to reduce our Social Security expense? Well, vote. I don't know. There's nothing you can do to change that. So don't have detail where it's just really not necessary. Incorrect account names is another kind of comical one. In my line of work, I've seen some crazy things that people named expense accounts. One person had void expense in their list. If they voided a transaction, they just changed it to void expense. Or truck loan expense is another one. You think, well, that's money going out. I should be able to deduct that. So I'm going to make an account called truck loan expense. Well, no, that should be on your balance sheet as a liability. And then that loan just gets smaller as you make those truck payments. Your deduction there is your depreciation, not the loan payments. Credit card expense is another one. Well, we charge that on the credit card. Well, good job, but that's not credit card expense. The reason this kind of thing matters is we try to teach people how to keep their books in the unlikely event of an audit, just like the unlikely event of cabin pressure change when you're on a plane. They want you to be able to know what to do. If an auditor sees a lot of crazy named accounts or miscellaneous, here's miscellaneous. If you have a lot of stuff in miscellaneous, they're going to look at that and potentially disallow everything that's in miscellaneous. If it's a business expense, it has a spot. Miscellaneous is really not a place to put things. Another common mistake is maybe you do a marketing event every year, and you put an expense account for that. So you could say, community picnic 2010. Well, then you have community picnic 2011 and community picnic 2012. You don't really need to do that. Your date range will show you income and expenses for that event for that year. So it's not necessary for something that you want to track expenses for and income for to have a new line with a year on it. Not necessary. If you find that you don't use a particular account, maybe it was set up in the chart of accounts when you started your QuickBooks file, but you don't really use it, like this promotional. Maybe you have advertising expense up here and you've really never used this promotional one. So we can just make it inactive. Yes, I'm sure. So all that does is take it out of the list. If I need that account again, I can get it back. But as you're scrolling or as you're typing and doing data entry, the less you have to scroll through, the faster your data entry is going to be, the cleaner your reports are going to look. So if it's one that you've not used before and there's nothing to merge together, you can just make it inactive and it hides it from the list. Similar cleanup can happen in vendor lists and customer lists. So if I've got a customer that maybe I put in there the first time as Mrs. Smith, because that's what she told me her name was. Well, the next time she called me back and said it was Mary Smith, and I have an employee that enters Mary Smith because she didn't see Mary in there. Well, then another employee maybe likes to enter last name, first name. So it's under there 3 times, Mrs. Smith, Mary Smith, and Smith, Mary. You can merge those just like you can merge accounts by just changing the names of the ones you don't want to keep to the name of the one you do want to keep and merge the customer name. It does the same thing, puts all the transactions for that customer in the same line. One of my favorite ones to talk about is vendor lists that have that. If you've been around the St. Louis area for a while, you may have had a vendor called Union Electric. Well, then Union Electric was Ameren UE. and then it was just Ameren. So you might have 3 vendors that are all electric bill, and oh my Lord, it doesn't matter that you paid all 3 of those under different names. It's still electric bill. That just can be all be one vendor. It's okay to change the name of a vendor if they have a name change. The only time that that's not a good idea is if you would have to send someone a 1099. If maybe somebody goes out of business and they reopen with another partner and call their business something similar, and it's the same guy to you because you still call Fred when you need this service done, but it's a different company. That kind of matters because you would have 2 separate 1099s to issue at the end of the year to the company that closed and the new company. Otherwise, it's just a good idea to keep your customer list and your vendor list clean so it's less to scroll through. You can delete or make inactive names that you don't use. If you have a customer that bought something from you one time 7 years ago and you've never had contact with them again for whatever reason, they moved or whatever, they don't participate in whatever your company does, you can make them inactive too, just to get them out of the list. The shorter your lists are, the more efficient your data entry will be. So let's talk about some reports. Once you have some data in there, you're going to have some reports, which you can access from this tab here on the left. And there's standard reports. There's custom reports if you have some special report that you have customized for your business, and management reports, which these are preset. But most of what you'll use is in this standard tab. Now you notice these little stars here. This is how to mark a favorite. Like if I really use this profit and loss by month a lot, I can put a star there and then it shows up in my favorites just so I don't have to scroll, because there's quite a lot of reports that are preset, very handy. Most people use these, so here they are. But if you use these 2 a lot and you don't want to have to scroll all the way down, if you put the little star, then they're right up at the top and they're easy to get. They're just easy to get. Probably the 2 that you'll use the most are balance sheet and profit and loss, maybe accounts receivable. Let's do some customizing. So you can edit the titles if you don't like this. I don't want income to be called income. I want income to be called revenue. Maybe I like that better. Oh, and I can spell. So then I probably have to refresh. Now, my income accounts are called revenue, if you like that word better. You can change this. Some people like this to say income statement. So any titles that you want to change, you can do right here. The date range is very important. There are some canned date ranges that you might always want to look at today. You might want to look at this month or this year to date. This is a handy one. I love this. This year to last month. So whatever last month was, you don't have to keep changing the ending date. That's something that they changed a year or so ago that is so handy for me, because I'm looking at what people have done through whatever last month is. And instead of having to manually change this date all the time, it has a canned report in there to last month. So if I want to look at last month and say run, it will show me January through July in this company. Now, maybe I want to see, let's go through June, because I want to see by quarter, how is this doing? How am I doing by quarter? So instead of display columns by total, I can display them by quarter and run the report. Now I've got a column for January through March and April through June. It also has a total for me if I care about that, but it shows me, oh, well, I didn't do so good in the first quarter, but I'm a landscaping guy and not a lot happens between January and March for me. So I'm not really shocked at this. But then it's starting to pick up in April through June as we're planting things for people, putting down mulch, whatever. The third quarter for me is huge, but I can see that progression down here based on selecting quarters or months if I want to see that. So now I can see by month all the same revenue accounts and expense accounts, net income at the bottom. You can see trends. So cash and accrual. If this is accrual, meaning this shows my revenue and expenses or my income and expenses, whether I've received the money or paid the bill. So if I created an invoice and somebody's going to pay me within 60 days, it's still going to show up on this report because it's accrual basis. If I change it to cash basis and say run the report, this is money I've actually received. So not much going on January, February, March, but I have zero. Remember, I had a little bit of activity on that accrual basis report. Here shows me what cash actually moved. So some people, even though you keep your books on accrual basis, if you use invoices and bills, if you just enter things as they happen and you don't keep track of who owes you money or who you owe money to, your reports are going to look the same no matter which of these radio buttons you pick. But just so you understand the difference in accounting method, and just because you file your taxes on a cash basis doesn't mean you have to do your reports on a cash basis. Accrual reports might help you make other business decisions like, man, this would be our net income if we collect all those invoices instead of having a loss for that month or something. It just helps you see where your business would be if everything was paid and everything was received. There's some customization that can happen here. So while you can change the dates up here, if you have a bunch of changes to make, you can do it on this customize button and make the changes all at the same time. So you can change to cash or accrual. You can change your dates. You can say, don't show me zeros. If you have a big long chart of accounts, it's going to show you every single line, whether there's activity or not. So if I say accept zero amounts, it's not going to show me those lines that have zeros on them. You can change the columns here by quarter like we did, or month like we did. Showing active mean they still could have a zero if there was 300 in and 300 out on that line. It will still show if you say active. If you say non-zero and it's zero, it won't show that line. You can change your columns. Maybe I want to know what's the previous period and the dollar change. So now I can see, since this is July to September, I happen to pick the quarter, it shows me the previous period and the change. You can pick dollars change or percent change. So this is all a lot of personal preference. What do you want to see? You can see year to date. You can see prior year. You can hide particular columns. I can filter. If I have this and I only want to see a particular vendor, a P&L by a particular customer or vendor or product, you can make all those filters. You can change the headers. Maybe you don't want this to say profit and loss just this one time. We're going to say income statement. Oh, not there. We're not. I wanted to say income statement. I can also check or uncheck these footers. Maybe for some reason you just don't want this on your report. It's going to a banker or something and you just don't want them to know what time. Just doesn't matter. It takes up space and you don't want it on there. You can align it left or center or right. And same with the footer. So there's lots of different customizations you can do here. Now, if I have a report that I customize, let's do this month to date I'm looking at. For whatever reason, this is what I want to see, and I want it by week. So I'm looking at my weekly sales report, my weekly expenses, and I get all these customizations, and I just want to change it because I find myself going in here every week and doing this report and making all these customizations. I can save it, and then it will ask me, what do you want to call this? And I'll show you later where you would go to find that. So we're going to say weekly sales and save it. So then I can go in my reports and find my memorized reports and just pull that back up. The trick with doing that is to use words. And you're certainly allowed to type, it will let you type a particular day to begin and a particular day to end. But if you save that and this says custom, it's only going to save that specific date range and not really what you're trying to do. If you use the words here, other than custom, if you use these choices, then that's the date range that it will remember. It will always remember next week or last year or this week or whatever settings you've selected here, it will remember those settings. So that's the trick to using that. It's good to know the difference of what is on these reports. Like the profit and loss is your income accounts, your cost of goods sold, expenses, and then you may or may not have other income and other expense down here. Here's miscellaneous. If this is my client, I would click on this and make them fix all these. What are these? These are bills. This is a hardware guy. That was some kind of parts. This was a subcontractor. This is insurance. These are not miscellaneous. So the good thing about QuickBooks is I can open this up and just change them. So, oh, how did I get up there? So these were just, I had to go to the hardware store and get some parts for something. Yes, I'm sure. It warns you in case you're making a mistake, but as you fix them, then they disappear from the list. So those are the kinds of accounts that are on a profit and loss or income statement. If you go to the balance sheet, so balance sheets are what you own and what you owe. So here's all my cash, my receivables, people that owe me money. Inventory, if you have inventory, would be on your balance sheet. Undeposited funds is an account that QuickBooks creates so you can record several payments from customers without having to make 7 different deposits for 7 different checks. You can take 7 checks to the bank on 1 deposit at the bank. Well, if you do 7 different deposits in QuickBooks, it's going to make your reconciling a little more difficult. So undeposited funds is just the bucket that they sit in until you record them on a deposit. Truck, this is my asset. So if I might have vehicles and office furniture and computers, things like that are in there. Then liabilities are things that I owe. So here's accounts payable. This is just bills that I have, maybe my electric bill and some bill for some parts and some gas. My credit cards are on here. A whole nother day talking about why you shouldn't enter a bill for a credit card because that takes it out of here and puts it in here. That's another day. More liabilities might be sales tax that you owe if you collect sales tax, or payroll tax if you have payroll inside your file. I don't know what the Board of Equalization is, but we owe them $370.94. You might have a loan. This is current liability, so maybe this was a loan from the owner. He had to put in $4,000 for cash flow because during January, February, March, there were no sales. So he just puts the money in, and this is a current liability, meaning it's going to be repaid within a year. Then I have a long-term note. Maybe I have a note on that truck that I have up here. So maybe not, because it was $25,000. But I, for whatever reason, I don't know. This is maybe a equipment loan or some other kind of loan that I have. Opening balance equity should have no dollars in it. That's a system account that's created when you make a new account. Let's say there. Oh, I couldn't find that. And it's not that. We got a building. So if I say the original cost of this building is $250,000 as of pick a day. Now my balance sheet is going to have a big number in opening balance equity because I didn't put the other side of the transaction. It's kind of a holding spot for maybe your bookkeeper or your CPA when you're like, I didn't know what to do with this. I opened another bank account and I put $5,000 in it, but I didn't know what to call that. So the system calls it opening balance equity, and these would be a list of things that need to be moved to wherever they go. Retained earnings, there's nothing here because this is a new company. Retained earnings is the earnings or profits in your company from the beginning of time through whatever date you have your balance sheet. So if you're new, you're not going to have retained earnings until the next year. If your net income for the year was $100,000, when the next year rolls around, if that's a fiscal year or a calendar year for you, that $1,000 gets rolled into here and your P&L starts fresh every year. Your balance sheet are numbers from the beginning of time through the date of the report, and retained earnings is where that money goes from your profit and loss because that's zeroed out every year. If you think about like your checkbook, January 1st of every year, your checkbook doesn't zero out. Your checkbook still has whatever the running balance was, but your profit and loss starts all over again, and that gets rolled into this number. There is a number on your tax return that your accountant will look at retained earnings and make sure that it matches what it's supposed to match. So if you've changed something that was from a prior year, we know. Another helpful report is who owes you money. Accounts receivable. This is a summary report. So this shows me everything that is owed to me from Amy's Bird Sanctuary, from Bill's Surf Shop, and it ages it. So it tells me the current things. Like these are probably invoices that I've just made. If I click on the bottom number here, yeah, these are all July. So this shows me invoices that are pretty new. But as of August 26th, they're not paid yet. This is 1 to 30, 31 to 60. This is who I'm going to chase. Hey, where's my money? You can look at other reports that show detail. If there's more than one invoice in any of these numbers, this is just a total. There are other reports that show you line by line if you like that better. Accounts receivable aging detail shows you every single invoice, and they are in date order. I find this a little hard to look at because if Travis is on this report twice, I have to scroll and look for him. If they're on there once, it doesn't matter, but this groups together the detail of the 31 to 60, the detail of the 1 to 30, the detail of the current. It's just a personal preference, I think. Accounts payable is who you owe money to. You might look at your balance sheet and say, woohoo, look at all this money I have. Well, hold on. but you owe all these bills too. So this shows you with your bills, there's a detail report and there's a summary, just like receivables, of your bills. So if this is from 6/16 and I haven't paid it and we're at August 26th, how come? Maybe I need to go ask my bookkeeper, my controller, hey, what happened to that bill for PG&E? We never paid that. Well, maybe it's a cash flow issue. Maybe you have something that you're arguing with them about the amount of that bill. But it's a good way to know, yeah, I have some money. Let's look at the payables list and see who are we going to pay this week. It's also a good way to manage your bills. Maybe your bookkeeper could print this report for you every week and say, all right, these are our bills. Who do you want to pay? So classes is another way to track. I don't know if this file, let's find out if this file has any classes in it. Doesn't look like it. It's not turned on. So classes would be a way to track divisions in your company. Like this is a landscaping guy. Maybe he wants to know residential versus commercial. Maybe he has 2 locations and he wants to know St. Louis County, St. Charles County. Maybe he does some work in the city, and that's important to track city revenue and city expenses and city payroll, because you have to file a tax return in St. Louis City if you have St. Louis work. Or maybe we're so close to Illinois. I do have a lot of clients that have some in Illinois. Well, you have to file in Illinois if you're doing business in Illinois, even if you don't have a location there. This landscaping guy might go every spring over to this office complex and put down mulch and take out old bushes and plant some flowers. Well, that's work in Illinois and it's consistent. So we need to tell Illinois about it. So there are different reasons why you might want to track things by class. So, and this gear up here at the top, under account and settings, I can say, I want to track things by class. So if I turn that on and say done, oh, no, I do want to save it. Oh, I have to save here. And then done. So now, oh, please wait. Now when I'm recording an expense, so let's see. LS equipment rental. It comes up with equipment rental because that's what I've previously used. So it's trying to help me out. But this bill that I have isn't $112. It's $250. So thanks, but that's not what I need. Now there's a class box here that I can pick. And I know this was for a residential job. While I'm in here, I'm going to put both of them in there. So now I have a drop down. Was this a residential expense or a commercial expense? So I'm going to pick residential and say save and close. So this is 8/26. So let's do a profit and loss as of today. And I want to say, make my columns by class. Now, the only thing that we have in there is this, but you can see there's a column for residential, there would be a column for commercial, and a total. So I can see income and expenses, and most importantly, net income by division. So if you need to say, are we really making money on the residential side, or do we want to just switch to commercial only? This will help you see that, but you have to tag your transactions with a class. So if I make an invoice for something, I can pick one of those classes and track my revenue by class also. Just a handy feature. It is not for, I had one guy that put every single customer he had as a class because he wanted to see if he was making money job by job. Well, there's other ways to do that, and that's not a good use of classes. Another way to bump yourself up into the advanced version of QuickBooks Online is to have too many classes. It also makes your reports crazy wide, and it's not helpful. So think of more of big picture and profit centers like divisions or locations that you want to see income and expense by those big, broad categories, not in the minutia. Customer types is another customization that you might do. If you have, maybe you sell warranties. I have an HVAC company that sells warranties, and they have platinum customers and gold customers and silver customers. So the level of service that you pre-purchase might put you in a group with other customers that are all platinum customers, and maybe you want to run reports like that. So here's customer types. I can add platinum customer. We'll just do 2. So now when I am looking at my customers, maybe Amy purchased a platinum subscription. So I can make her a platinum, just tag her as a platinum customer. And then there are reports that you can run to group those kind of customers or vendors or whatever it is that you have types for. Maybe there's people that after they've been a customer with you for 2 years, they get a discount. So maybe they're in the 10% discount customer group. There's all kinds of things that you can track with customer types. You might also want to do like delivery routes. Maybe you have a blue route that runs Monday, Wednesday, Friday. You need to group all those people together, or a green group that's Tuesday, Thursday, or there's whatever helps you in your business. You can make those customer types and tag people. One of the things that keeps me in business is general ledger reviews. So I look at your profit and loss in your balance sheet, and not a nice way to say it, but what I do is just fix all the stupid stuff. So you might have a balance sheet that has an enormous number in undeposited funds, like $1 million. I've cleaned up files before that had $1 million in undeposited funds. What that usually means is revenue is being duplicated, because you make an invoice for somebody that records income on your profit and loss. Then when you receive the check or the credit card payment for that invoice, you just make a deposit and you hit your income account here and the amount. Well, that's duplicating the income. It's once on the deposit and once on the invoice. So if you make an invoice, you need to receive the payment against the invoice and then do the bank deposit. If you don't have an invoice, you can go right to the bank deposit. But that tells me, if there's a big number here, that tells me either that there's some checks that haven't gone to the bank yet, or you're duplicating income somewhere. If that number is negative, that's a timing issue. So QuickBooks is very date oriented. And if you have an invoice dated the 15th of August and you got the payment on the 16th of August, and then you make a deposit and you date the deposit August the 1st, it's going to show negative amounts if I look at a report on August the 1st, because the deposit happened before the payment was received. I'm going to look at your assets and see, do you have anything in here that doesn't really belong in here? A lot of times I'll look at the detail in here and there'll be a $25 part for the truck. Well, you don't have to put that in assets. That's just a repair. And you're dipping yourself out of an expense. So look in your assets and make sure that only big things are here. The basic rule, the IRS doesn't really want to see anything capitalized if it's not $2,500 or more. We used to tell people, make a capitalization policy. Some had $500. Oh my Lord, it's just so much detail in your fixed assets, and it really doesn't need to be there. You can expense those smaller things and just put large things here. Accounts payable, I would look at that number 160267. So I would look at a detail. Was that ARAP? Maybe I picked the wrong one. And make sure that the detail report matches matches the detail report, which these are the details, matches the balance sheet summary, and it does. If there's anything 61 or 90, I might ask about it. Hey, how come this bill is so old? You might have a very good reason. No, we've disputed that invoice. They did not do that work, or they did a bad job and we're not paying them. But you still have it in here. So maybe it's time to, once it gets to be in these categories and you need to make a decision, maybe we need to write that off, or maybe we need to just take that bill out because it's muddying up the reports. I would look at your credit card account and your bank accounts. Are you reconciling? Just because you had the bank feed, which this one isn't going to be set up because it's a sample company. But it is. Yeah, thanks. Just because you add things through the bank feed doesn't mean you didn't miss something, or doesn't mean there's not a duplicate in there. So I would look and make sure that you're reconciling your accounts. I would look to see, do you have a loan that maybe has a negative balance? Usually that means that you bought a truck and you put the loan account in here and you're making the loan payments, but you never recorded the original amount of the loan. So that's an easy thing to fix. We'll just record that. I would look in opening balance equity, clean all these out. What is this stuff? Put it where it goes. A new thing that I've added to my general ledger reviews is PPP loans. People got their PPP loan and they recorded the cash that was debited my checking account and it credited my PPP loan. But now what do I do? So all those expenses that you have that you could attribute to your PPP loan need to be moved to the loan because they are not deductible. If you take that PPP money, it is not taxable, so the things that you spend on it are not deductible. And instead of being on the P&L, they would just reduce your PPP loan. It's kind of like forgiving the loan as you go, because if you change your payroll expense and your utility expense to your PPP loan liability, it reduces this. When it gets to zero, you just stop doing it, and then you can deduct those different accounts. 1099s are an issue, not at this time of year, but you might pay some people that you're required to send a 1099. There are reasons why you do, there are reasons why you don't. But if I need to send Books by Bessie a 1099 at the end of the year, there's some information that I need from Bessie, like her tax ID number. I need to know her address, which I have in here, and the name of her company. So is that enough? There. And say, I have to track payments to Bessie for 1099 purposes and save it. So in another section of the vendor area, I can't get there from there. There's a setup wizard in here. We're not going to go through that today because that's a little bit involved, but you can get started here. It helps you set up the parameters for your 1099s. Which accounts do you need to track? You don't need to track 1099 payments for insurance or for utilities, but there are other expenses that you do. So there's a little wizard in here that's really helpful to track your 1099s, but you also have to tag each vendor. So this might be one, because she's my IT person. I would have to check the box and put her ID number there so that QuickBooks will track 1099s for me. You can print your 1099s right out of QuickBooks. You can even electronically file them right out of QuickBooks, but you have to have the setup right. There are naming issues that need to be addressed, and you have to make sure you have ID numbers for everybody. So that's another topic for another day. So what is your CPA looking for if they look in your file? If you have QuickBooks Online, you can add accounting firms to be able to look at your file. There's certain things they can see and do in your file that you can't do because they're accountant type users, and they do not cost you a user fee. Like if you have 5 users in your QuickBooks file and you paid for 5, adding an accounting firm is not going to cost you more money. You're allowed to add 2 for free. So you might have your CPA and somebody that works for your CPA as accountant users. They can get into your file while you're in your file and fix something. You call them and say, I have this transaction for $5,000. It's in the wrong spot and I don't know how to fix it. They can log in and fix it. And you get there from the gear and manage users. And this is your company's users. These are accounting firm users. So what would your accountant look for? Well, they would look for those things we just talked about. They're going to look at your balance sheet and see, did you add any fixed assets? Because they have a schedule that they need to track your depreciation, and they need to add that to their fixed asset schedule. They're going to look to see, is your loan balance on your truck? We'll say this is the truck loan. Is that balance going down, or is it the same it was last year? If it's the same, that makes me think you're recording your loan payments somewhere else, and we need to fix those. They're going to look at that retained earnings number. Does it tie to the number from last year's tax return? Because it needs to. They're going to see if you track things by classes. They know you have work in the city, and they need to know how much was in the city. So they're going to look and see if you are doing that tracking correctly. They might tie your payroll numbers. When I worked in public accounting, people were sometimes hesitant to send their payroll reports. Oh, why do you need that? Well, because I have to tie I don't know where it is in this company, but I have to tie your payroll expense to, I think this person is a sole proprietor, to your payroll expense on here should match your W-3. Owner's pay, if you're an S Corp, might need to be separate because there's a line for that on certain tax returns. Or maybe I want to look at, are you taking too much draw? There are rules, depending on what kind of entity you are. Down in the equity section, if you were taking draws, those would be down here as a negative number. That's okay to be a negative number. And, well, this file has been around long enough. If you had accumulated depreciation, there would be a negative number in the asset section. That's a number that's also okay to be negative. Pretty much nothing else should be negative on your balance sheet. So I'm going to look for that if I'm your accountant. Your inventory number, is that something that you track live inventory in your file, or do you just adjust it at the end of the year after you count it? So that's something that I would look at. Are you putting personal expenses on your P&L? Like if I see that you're a sole proprietor and you're putting income tax expense on your profit and loss, that's not a company expense, that's your personal expense. So I would look for those kind of things if I was your accountant. Are you reconciling your accounts? Everybody's going to ask you if you're doing that. Your banker's going to want you to do that. Your accountant's going to want you to do that. I'm going to want you to do that. So that's a thing. So another thing that bankers might look for, if you've gone to your banker and asked for a loan, they're going to look and see what kind of debt you already have. If this $25,000 has been sitting there for 3 years, what the heck? I'm not going to give you more money if you can't manage the money that somebody else gave you. They're gonna make sure, look at your net income. Are you able to manage the new debt service that we're about to loan you some money? If it's a refinance, that's a little different than, is it adding to this? So they're going to look at stuff like, what is your net income? What is your gross profit percentage? Is that normal for whatever your industry is? Bankers look at what you're using the money for that you've already borrowed. If you have a line of credit with them and you use it to buy a tractor, they're not going to be happy. They want you to use equipment loans for equipment, line of credit for cash flow. They want you to use the money for what you said you needed the money for. That's a very big thing with bankers. So they're going to look for growth. They might run a report in your QuickBooks or ask you for a report in your QuickBooks file that is by month because they want to see trends. I'm a landscaping guy, so that banker's probably not going to be upset that January, February were pretty low, but they want to see most of my income when my income is supposed to be, because my business is seasonal. If it's not seasonal, then they want it, well, do you just have a bad bookkeeper? Is that why your revenue is all in 1 month? Because they tried to catch everything up in August before you showed me a report? So those are just some things that accountants and bankers will look for. Mostly, I think staying on top of data entry helps you get good reports. If I'm going to look at something on my balance sheet that's wacky and it was from 8 months ago, it's harder to remember, maybe harder to find documentation that back up that particular transaction. So if you keep up with it and do your data entry on a regular basis, do your reconciling on a regular basis, you'll have good reports to make good business decisions with. I don't know if we have any questions.
Well, I will bring up, Jane, Bruce did ask what version you're using, and I told him that you were using the online version. Could you maybe talk about what the difference is? Is there a lot of difference between the online version and the software version?
And the desktop version? Yeah. Well, it's more, some people really need the online version if they're very mobile. Sometimes they're working on their phone, sometimes they're working on a tablet, sometimes they're at home or in the office, and they want to be able to access their QuickBooks file quickly and easily, and there it is. Now, I'll say the functionality is a little bit different. The QuickBooks desktop versions can be more beefier. The advanced version of QuickBooks Online is the most beefy. It does the most things. It allows you the most detail, but it just depends on what you need. I have clients, my favorite version of QuickBooks is any version of the desktop version hosted, because on a hosted environment, then you have that anywhere access. I use that at home during the pandemic when I couldn't go to the office, and it works similarly. Security is on Intuit. If you have the online version, you don't have to do backups of your file because they do the backups. There's just some functionality that's better online. There's some functionality that's better on the desktop version. It's all depending on what you need. And there are subscription levels for desktop and subscription levels for online. Again, more functionality, the more you get what you pay for. So if you needed to do more things, you need a more expensive version. And then the accountant version, which you can't have unless you're an accountant, does some really cool stuff because we need to do really cool stuff.
Gotcha. We'll give people a few more minutes to ask questions if they might have any. I'm not sure that anybody does, but did you have anything else? Is that pretty much about it, Jane?
I think that's it. Just thanks again to Villages of St. Peter's for sponsoring the Chamber U today. And I just want to remind everybody, especially in St. Charles County, mask up and wash your hands.
Perfect. Well, thank you very much for being here today for us. We certainly appreciate you providing some insight to advance QuickBooks. It's been years since I've used QuickBooks myself. I used to use it for another chamber, and a long time ago. We're talking like 13 or 14 years ago, but it's amazing what you're able to do on QuickBooks. And I think it's certainly something a lot of small businesses could take advantage of, and being able to do a certain number of things in-house without having to put it out. They make it pretty simple and pretty user-friendly from what I could tell. So that's good for a lot of small businesses. So anyway, thank you again, Jane. We appreciate it. All right. With that said, we want to thank everybody for joining us today. We try to do a Chamber U seminar at least once or twice a month, and we don't believe we have any currently scheduled, but once we do, we will post it out there and on the Chamber's website. So feel free to check it out every once in a while and see if we have anything upcoming. So with that said, again, thank you, Jane, and thank you for sharing the wear a mask. The Chamber is certainly advocates for mask wearing. We want to make sure that we're able to keep our economy going, and have a great day. Thanks.